A major shift is underway. Chinese companies are rerouting their global ambitions not to the West, but to Singapore. Once seen as a convenient stopover, Singapore is now emerging as a strategic destination, a place where global business dreams can be reimagined and realized. This trend, which picked up during the Trump era, has become a full-scale migration, driven by rising US-China tensions. As trade wars and geopolitical rivalries intensify, Chinese firms are searching for a safe haven, somewhere they can operate without the constant threat of sanctions or political backlash. Singapore is now the destination of choice for Chinese firms seeking a neutral, international identity. Its reputation for stability, transparency, and world-class infrastructure makes it especially attractive for companies eager to shed their Chinese label and present themselves as truly global players. Corporate services firms report a surge in Chinese clients, with Incorp Group noting a 15–20% annual increase. This influx is reshaping Singapore's business landscape, bringing new energy, investment, and competition to the city-state. This isn't just about opening offices. It's about relocating headquarters and rebranding as global, not Chinese companies. For many, it's a complete transformation, involving new leadership teams, revamped business models, and a fresh approach to international markets. The industries making this move are at the heart of the US-China tech rivalry: AI, biotech, optical products, and data centers. These sectors are not only highly innovative, but also highly scrutinized, making Singapore's neutrality even more valuable. By adopting a Made in Singapore label, these firms hope to bypass trade barriers and access restricted technologies. It's a strategic maneuver, allowing them to tap into new markets and form partnerships that might otherwise be out of reach. It's a calculated evolution, seeking stability, growth, and a safe harbor amid global uncertainty. For many Chinese companies, Singapore offers not just opportunity, but a lifeline in turbulent times. Singapore's East-West connections, rule of law, and pro-business policies make it the ideal launchpad. Its unique position as a bridge between continents gives companies access to both Asian and Western markets. This Singapore washing raises big questions about corporate nationality and the future of global business. As more companies make this move, the world will be watching to see how Singapore shapes the next chapter of international commerce. The main driver behind this migration isn't just about business opportunity or market access. It's about survival in a rapidly changing world, where the rules of global commerce are being rewritten by politics and power struggles. Increasingly, companies are searching for a geopolitical shield, a way to protect themselves from the fallout of international tensions and trade wars. The intensifying US-China rivalry has made it risky, even dangerous, for Chinese firms to expand globally while remaining anchored at home. Every new sanction or tariff can threaten their future. Singapore's neutrality, along with its strong diplomatic and economic ties to both Washington and Beijing, make it a unique safe haven for companies caught in the crossfire. By moving their headquarters to Singapore, these companies can rebrand themselves as truly international players, lowering their political risk and gaining a new identity in the eyes of global partners. The benefits are tangible and immediate. US tariffs on Singaporean goods are far lower than those imposed on Chinese exports, giving companies a crucial edge in global trade. Shifting production or assembly to Singapore allows firms to legally label their products as Singaporean, bypassing steep tariffs and gaining access to new markets that might otherwise be closed. A Singapore base also opens doors to US technology and capital, resources that are increasingly restricted for Chinese entities due to tightening regulations and security concerns. Singaporean subsidiaries can access advanced tech and global funding that their Chinese parent companies simply cannot, giving them a vital lifeline for innovation and growth. This multifaceted strategy helps maintain access to markets, technology, and finance, all under the protection of a neutral flag, and with the flexibility to adapt as the world changes. In a world splitting into rival economic blocs, it's a sophisticated and forward-thinking response, one that could define the future of global business.
Beyond geopolitics, the Singapore brand is a global asset, trusted, reliable, and transparent.
Chinese firms hope to inherit this credibility, easing their path with Western customers and investors.
Singapore's cosmopolitan environment is a perfect launchpad for global expansion and executive training.
Its extensive network of 28 free trade agreements unlocks new markets for Chinese companies.
This diversification builds resilience, reducing reliance on the US and Europe.
Ultimately, moving to Singapore is about adopting a global identity, not just a new address.
Singapore's neutrality and reputation as an honest broker are key attractions.
For many, Singapore is the ideal platform for global business in a divided world. The city-state's trusted image is its greatest draw.
It's a pragmatic, multi-layered strategy for navigating a fragmented world. The Singapore label is now a passport to global opportunity. For many, it's the only way forward. Singaporean presence enables global growth, regulatory flexibility, and a new corporate narrative. This approach solves complex problems: marketing, regulatory, and financial. Financial operations are also restructured. Shandong Boan Biotechnology uses its Singapore subsidiary to fund U.S. expansion, bypassing China's capital controls. The goal is to be judged on merit, not nationality. Even biotech firms like Chemlex, founded in Shanghai, now claim Singaporean status to avoid U.S. scrutiny. Chinese firms aren't just relocating, they're reinventing themselves. TerraHop, an optical tech company, presents itself as purely Singaporean, hiding its Chinese backer. Data center operator Day One and AI firm Manus AI have spun off from Chinese parents, emphasizing their Singaporean identity.
For giants like Shein and TikTok, Singapore washing has limits.
Their size and influence mean they can't escape political scrutiny, no matter their headquarters.
Shein's move to Singapore didn't shield it from US and UK opposition to its IPO, nor from Beijing's control.
TikTok, owned by China's ByteDance but led by a Singaporean CEO, still faces relentless US pressure and forced divestment.
For high-profile firms, a new address can't erase Chinese roots in the eyes of Western governments.
Experts say rebranding works best for low-profile entities, not global giants.
For Shein and TikTok, their Chinese identity remains inescapable. The geopolitical spotlight follows them wherever they go.
Even smaller firms find Singapore's shield is not foolproof. Western governments are getting better at tracing ownership and influence back to China.
The Yuxiao Fund's failed bid for Australia's Northern Minerals showed that a Singapore address can't hide Chinese links in sensitive sectors.
US authorities are also probing Singapore-based firms like Megaspeed for allegedly diverting restricted tech to China.
Executives know the risks. Du Changlin of Shandong Boan admits their strategy depends on staying under the radar.
The bet is on remaining small enough to avoid attention, but that's getting harder. Governments are connecting the dots, and the Singapore tactic is under pressure.
For now it works for the less visible, but scrutiny is rising.
The margin for error is shrinking. The strategy's future is uncertain.
Corporate services firms in Singapore see the migration accelerating as geopolitical lines harden.
Economists say Singapore's international brand and cultural familiarity make it uniquely attractive for Chinese firms.
But experts warn the Singapore washing tactic isn't one size fits all. Smaller, low-profile firms benefit most.
Larger companies like Shein and TikTok can't hide from global scrutiny.
Executives know the risks. Success depends on staying below the radar.
For many, Singapore is a temporary solution, not a permanent fix.
The move buys time and opportunity, but isn't foolproof.
The strategy's durability depends on evolving geopolitics and regulatory vigilance. For now, Singapore remains the best option for many.
For Singapore, the influx of Chinese firms is both an opportunity and a challenge.
The country's open, pro-business stance attracts capital and talent, reinforcing its global status.
But Singapore must guard its reputation. Being seen as a haven for rule-bending companies could backfire.
Recent scandals, including a billion-dollar money laundering case, highlight the risks of unchecked foreign capital.
In response, Singapore is tightening regulations and boosting anti-money laundering efforts.
The goal is to welcome legitimate business while filtering out bad actors.
Singapore must show the world it's a responsible global citizen, not a loophole.
Balancing openness and vigilance is key to its continued success. The stakes for Singapore's brand have never been higher.
The future of Singapore washing is uncertain, but demand remains strong as US-China tensions persist. As global supply chains are redrawn and companies seek safe havens, Singapore's reputation as a neutral, business-friendly hub continues to attract attention from firms caught in the crossfire of geopolitical rivalry.
For now, it's a viable option for smaller firms in non-sensitive sectors seeking global growth. These companies benefit from Singapore's robust legal system, transparent regulations, and access to international markets, making it an appealing launchpad for expansion beyond Asia.
But as Western scrutiny intensifies, the value of a Singapore address could diminish. Regulatory bodies in the US and Europe are increasingly alert to attempts at circumventing sanctions or trade restrictions, putting more pressure on Singapore-based entities to prove their independence and compliance.
Singapore's own response is crucial. Too lenient, and it risks its reputation. Too strict, and it may lose investment. The government must carefully calibrate its policies to balance global expectations with local interests, ensuring that Singapore remains both credible and competitive.
The city-state must walk a fine line, maintaining integrity while staying open for business. This balancing act is not new for Singapore, but the stakes are higher than ever as the world's economic and political landscape shifts rapidly.
Ultimately, this trend reflects a deeper geopolitical realignment. Businesses adapting to a world where politics trumps economics. Companies must be nimble, constantly reassessing their strategies as alliances shift and new risks emerge.
The strategy will evolve with the global climate, but the search for stability and neutrality will endure. Singapore's unique position as a bridge between East and West ensures it will remain relevant, even as the rules of the game change.
For many Chinese firms, Singapore is a waypoint, not a final destination. It's a strategic stopover, offering access to global markets and a chance to adapt before venturing further afield.
Their journey is just beginning, shaped by the shifting tides of great power competition. The choices these companies make today will influence not only their own futures, but also the broader dynamics of international business. The story of Singapore washing is far from over. As the world continues to change, Singapore's role as a crossroads for global commerce will remain a focal point in the evolving narrative of international trade.